Hey folks, how you doing? Let's do a couple of trade reviews here. I paper traded today in this paper trading account on tradingview.com. And let's look at what we were looking at. First trade was on Apple. First thing in the morning here, we were watching the support on the daily time frame at 304.88. That was the low of this trading session. And the gap fill, there was a little gap to fill at 304.44. So generally some support here, looking to buy the dip, looking to expect that support to hold initially. Market was gapping up this morning and Apple was gapping down, so there was a bit of a mean reversion to be had there. So let's take a look at what happened, and we'll go over my entries on these trades. So I marked in the low of the previous trading session and those supports around 304. Apple was trading around 305 pre-market. First candle, you can see we opened down there. These are 2-minute candles we're going to be looking at here, and the momentum was, so from this 2-minute bar, it doesn't give you any info basically. Now here you're seeing something like this. So we're holding the support initially. Now at this point, it becomes more likely that it's going to be sort of a buy the dip type of setup. So we're holding the support, and any kind of failure from here is going to signal a red flag. So we didn't actually fail, we just kept going higher. So I bought in on this third candle. I mean, that was pretty much all you could have done essentially, unless you got in right here on the open and just you said, okay, I buy. As soon as we get above that support, I'm buying, and I placed my stop below the low of the day. I guess that could have been the setup, but basically I bought the break above this candle right here, and my target was just a couple of points higher. It was basically just the high. I mean, this support right here is when I scaled out half of it, I believe, and then I scaled out the next half on the next candle. So let's look at what happened after that. You can see we had a mini pullback, volume's kind of light, and then we tried to break higher initially. Now, the thing with Apple is that Apple's not a huge momentum stock, in the sense that whenever it breaks out in a direction, it tends to fail at first. And this is something I've noticed in recent price action. Apple fakes out on the first attempts to break above or below a price, and then you'll get the real break. So watch for that when you're trading Apple. So as you can see here, we broke above it, consolidated more for 3 bars, and then we started breaking actually higher after that. So yeah, what about the 3-minute time frame? What does that tell us? Yeah, so we got the breakout. Okay, so it looks better on the 3-minute actually, and that's pretty much it. So let's keep going. Now ignore this blip. I don't even know where this came from, just a weird thing. What was that, at 10 a.m.? Yeah, it makes sense. Got the 10 a.m. data or something. Okay, so now I want to share with you my mistake in this trade. So I was long on this breakout, and like I said, I kind of got faked out in the sense that Apple does that a little bit, but I stayed in the trade because it wasn't closing below where I had my stop loss. So now my mistake in the trade was scaling out too early. So in any kind of, I scaled out into any signs of strength first into this move. But in hindsight, looking back on it now, and also kind of looking back on how the trade was forming itself, I realized that I should have just been using the 4 EMA as my reference point. And as long as Apple was holding the 4 EMA on the 2-minute time frame, that was basically going to be my signal to stay in the trade. And as you can see how long it held it here for. So let's keep going. And then we tried to lose it a little bit there. So that could have been your first time scaling out maybe. Then chopping around, we got another move higher. And let's go until when we officially lost the 4 EMA. You can see it's just holding this EMA the whole way through. So it's a good reference point. Now here we're starting to see a little bit of weakness where we actually see 2 candles closing lower in a row. And then you get the third one, and that would be a signal to kind of think about getting out if you were long down here. And then if you look at what it did after, we did get some follow through down and then just kind of chopped around. We broke higher and chopped around after that. So let's look at these entries here. You'll see that my first entry was right here. You can see that little blue dot. And I entered with small size with stop loss below here. And then I was scaling out relatively quickly. As soon as we hit here, I was scaling out half and then the other half, and that was it. Now after this pullback here, I bought in on the break of this candle. And as you can see, it was a decent trade, but I was too aggressive on the entry in the sense that I just hit market, get me in, and that's it. But again, with Apple, like I said, it fakes out often. I think a limit order would have been a better choice, especially if I was trading a live account. So there you go. So that was the second entry, and as you can see how many times I was scaling out there, and I was scaling out with small tenths of the position. So I was in with 1,000 shares, and I was scaling out with 100, 100, 100, 100, 100. But again, that was not ideal in the sense that, I mean, again, this blip is just ugly on the chart. I don't even know what this is. But as long as it was holding the 4 EMA, in my opinion, that was the signal to just stay in the trade. I could have paid myself something initially, like maybe take off like a third of the position or 2/10 of it or something, and then let the rest run and close it only when it loses the 4 EMA. So that was my lesson for this trade. Just kind of riding that momentum, using the EMA as a reference point. All right, let's look at what ROKU did. I traded ROKU as well. As a mean reversion type of trade. So I was looking to fade against the move higher in the morning. So I marked in the lows of last trading session and this level here, which was the low on the daily time frame, 123.78, and then 125 was the high of this move up here, and I believe it has significance on the daily time frame also. Okay, so ROKU moved higher first thing. Let's look a look. And it was basically going up with the market. The market was up first thing this morning. SPY was up. So I was looking at ROKU, and because I know ROKU is slightly weaker versus the market, I'm looking to play a mean reversion trade on ROKU. I'm looking to fade against any failure on this move higher. So let's look at what happened. So right there is a first sign of failure on ROKU. You can see that we are losing the 4 EMA, but we closed above it. So we're holding it essentially, but we tried to lose it. Next candle, there we lost it. So that was the first short entry right there, right on the break below this candle. That could have been your first short. Now, I guess there's different ways to structure that trade at that point, but I wouldn't go short if I saw this candle and then it was just an inside bar. You have to short it on the break of the inside bar, because or else it's not valid, because you don't know if the move is done. It could be like a 2-second pullback and like Apple and then just skyrocket again. So you got to wait for a little bit more confirmation. Now, there's the red flag here is that the volume was kind of light on those two red bars. So that's the first red flag here. And as you can see, after that bar, it got no follow through, still an inside bar. Let's look at what happened next. And then after, look at the volume. Look at that volume spike. So there's a big red flag. So I shorted into it there, and I had my stop above the high of the day at that point, and I stopped out when it broke the high of the day. So that's it. Now, that big green volume, maybe that could have been a red flag to just get out first, but still, see, it's a debatable topic, you know? So anyways, I stopped out right there for a loss. Okay, let's keep going. And I tried again the second time. Let's see here. So we broke out. Now look at that. So we did break out above 127.17. Now look how much follow through it got. It didn't get much follow through. It got about 50 cents of follow through, and then you get a big sell move like that. So that's what I mean by breakouts that fail more often than they succeed. And so there you go. There's a little bit of a buy the dip moment there. And that could have been a second entry short, except for the fact that we closed kind of ugly here. Now, I can't remember. I'm going to show you my execution in a second here, but I can't remember if I shorted it here or here or here. So let's take a look. So yeah, we got a nice move lower there, and that was a good short entry. But now look at this candle. Again, a huge volume spike. And like I told you, I know I didn't tell you, I was trading this blind. I was not looking at any time and sales to trade this, which is my own problem, but that's a different story. So just based on that candle formation, look at that volume spike, similar to the first volume spike we had. That is a red flag for short sellers. That's all it is, because it's telling us that there's strong buyers coming in whenever you get big volume coming in whenever it's at the end of a pullback. A second time here, strong buyers coming in at the end of a pullback. That's strength to the bulls, and shorts get ready to cover. And we chopped around for about 3 bars, and then it just grinded higher. Again, trying to kind of form up higher low, a little higher low there. Let's keep looking what happened. Another little volume spike. Look at that. So looking at the volume down there, I'm in the way here. Let me drag myself over. Yeah. So first time we had the volume spike, first time we had the short entry right here, short entry, Big volume spike, you better cover your short and get out. Breaks the high of the day, didn't get much follow through. Second short entry here or here, and you would have made money at this point, but if you didn't cover before we got here, you would have been a break-even trade. And again, volume spike bulls, and then just chopping around, another little bit of a bull volume here. So generally kind of hard to short this thing today. And that's it. So guys, I hope you learned something from these trades. And yeah, so yeah, there was the entry right there, short on the second red candle. Even though it closed like that, I just shorted the break below that. The break below 126.75 or so. Let's see, what was the price I entered at? 176.84. Yeah. Anyhow, and then I covered right here for just about a break even. No, it was a tiny loss actually. No, here. So like I covered half here for one tiny loss and then a tiny loss, or break even basically. I scalped it here again long after we saw this pullback holding the 26 EMA on the 2-minute time frame. Bought into that bull break, and as you can see again, bull breaks are not for buying most of the time, because in a stock like this, it's just kind of chopping, you know. And again, that's why there's an edge in trading options. But obviously I didn't trade options with this, but the reason there's an edge in trading options is because once you're able to understand volatility and when to prefer selling a credit spread versus buying a naked option, once you understand the advantages you have in taking those trades, using these entries, fine-tuning your entry points and exit points in conjunction with trading options, I believe has a strong edge in trading markets. And anybody who doesn't know how to trade options, in my opinion, you're missing out some money. So go and learn how to trade options. Have a good one. Bye.